uptrend. The market has just taken off, and you see we've gotten a lot of buyer participation in here. On buyer volume has gone up a bit. It's not as high as it was when we were around the 2150 to 2170 mark. We hit that support after our Trump rally, and it has taken off. We're hitting our highs. I have resistance at 2280. We can keep on going from there. The next one I have is at 2350. But if we look at these measured moves, you'll see that they're basically about 210 points. And with that in mind, 210 points would put us at about 2082 off of this move here. So 2282 would be very close to where we are right now. So we'll see when the Federal Reserve announces what it's going to do with rates. So I would look for this to gain support here tomorrow around the 2140 area or 2240 area, and then bounce up through the resistance, which will be 2280 to 2284. Now let's take a look and see how gold is doing. With this, let's say tomorrow they do raise interest rates a quarter point. A quarter point I think would be in favor of Trump. A half point could work against him a bit. The quarter point would basically show more strength in the dollar, and we could see our next move down in gold. Now here you can clearly see we're in a downtrend. We've almost hit the support, which would be around 1140. We hit 1162 and it's been holding here. But I think this next level, this next move down, if we do have interest rates go up, will strengthen the dollar, and you'll see this go right down. Now from here, there's really not much support. There's not a natural support level. Let's take a look at a monthly chart. You can see that the next support level will come in probably around 1108, then double bottom at 1060, and then we've got a way to go. We've got an open gap at 1027. So I mean, we could, there's never a rational move in gold. It always makes these really extreme highs and lows. You can see up here this tremendous unsupported price that we had from 1800 to 1963. Basically, that's a fairly large move that was unsupported within a 2-month period. And we could get the same here. It could break through this, and the psychological support of 1000, we could break that. I doubt it, but it could happen. And you can see on these large sell-offs, we're looking at ranges that are $200 in a month. And we have $100 this past month, and we can see another $100 this month. That wouldn't be unusual. That would put us around the 1050, that double bottom. But as I said, I don't think gold acts in a rational way, and so we could see this breakdown and for a further extension of our trend line here, coming down to the 890 area where this previous low that we have. So this could be a target for us. I mean, that would be a very volatile move. As you can see, the on-buyer volume has just plummeted. We've gone way down on the monthly chart. But we'll see. We don't know until we see what happens in the market. Now, if they do a zero interest rate, no hike tomorrow, we could actually see this come back. Maybe a 50% move back up, which would put us around 1220 area. that wouldn't be unusual either. And then, depending upon what happens with Trump and the administration and this changeover in the next month, it's a month and a week from today, we could see it retest the bottoms and put a double bottom in there. So let's see another area that's going to be extremely affected. That is going to be the dollar index, and the dollar index has been on a tear too. It's Let me see if I've got it. I've got oil up. Oil had a bounce down after the week, but let's take a look at the dollar index. The dollar index is coming to what looks like a extension pattern, basically a move off of 95.68 all the way up to 102 with a pullback to 99.50. We're coming close to the 50 moving average and moving back up. So if we get a bounce off of here tomorrow, we do have what some people term train tracks up here, a reversal pattern where the sellers have engulfed the buyers on 1440 continuous chart. So if this does continue down tomorrow, that would be a sign of getting our zero interest rate. The faith in the dollar is going to, basically peel back a bit. We could see it break the 100 mark. If not, if we get the quarter or even a half, we could see the dollar strengthen, break through this resistance, and head to a new target. The target that I had on my monthly chart was 104.5. That is what I'm expecting to happen, especially as we see things fall apart in one of my favorite areas, Europe. Europe is the one who's going to be paying the piper. Let's take a look at that. So Europe, is it going to be the dollar or is it going to be the euro? My bet is the euro is going to disappear before the dollar. We've seen it break this major support here, and this is a weekly chart. This support has been holding, but I'm looking for it to go to parity and then down to 90 for an equidistant move that we had here. And this move is repeating itself over and over. And so I think we could see that happen too. First breaking parity and then moving down even further. And maybe even in the disappearance of the euro. If I don't think Italy will exit, they're just going to try and get as much money as they can to cover their bank. And then we've got maybe a Frexit coming on, and then also finding that our IMF president is corrupt also. I mean, we're going to have some major changes. And so who's going to pull out? We even have more rioting in Greece, to stop the austerity. Austerity doesn't work in growing an economy. Anyone with common sense could pick that out. Yes, you got to pay for what you've consumed, but putting an economy into austerity, which is also a natural state, and then increasing their debt by threefold through these different quantitative easing methods, is just nonsense. So this is what I expect to see. I'm not saying that it will not retrace or come back up here and maybe get even to the 200, see the 120 level, but what it looks like right now is it's going to break this support and head down to parity. So we shall see. That's not too far off, and I think of course we will see that on the strength of the dollar index. The last one we can look at is a chart which has just been brutal again in its price action. This is just straight down. It's almost a parabolic move. Well, it is a parabolic move in the yen. We've got this is the Japanese yen in the futures market on the continuous contract, And you can see, we've came up to this, top, which is almost like the top in gold, actually. We've tested 3 times. We had a very weak volume on these tests. You can see as they get lower and lower, and buyers are bringing it up and sellers are selling it hard. And then we get this just huge move after Trump goes in and pushes the market quite far down. So, the Japanese yen, it's showing 8 cents here, but I think it's a 115 now, 116. Um, so we're seeing, quite a lot playing out here, and we could watch this go a lot further. We could definitely see this come down and head to the 125, 130 mark that we had earlier. So that's what I'm looking for tomorrow. Be careful. There's a lot of risk going into tomorrow's play. It's going to be at 1 o'clock. The Fed is going to make their statement on interest rates. So, if you're in positions and you've got your stops in, the stops are futures market. They're about 99.99% effective. But, if the bid gets pulled and, the market does move quickly, you could see your stops getting blown through. Equities, same thing. There could be a gap through your price. So if you're playing the financials, if you're playing some of the more expensive stocks, let's say you're paying Priceline or Amazon, and the gap's $50-$70 per share. Be careful. If you're in a profitable trade, you might take it out and then find another entry. But use your risk management, and the goal is in trading that you don't have to trade, that you don't have to be in during the high volatility. So choose wisely, make a strategy, make your plan for the day. I'm gonna watch where it is at noon tomorrow, and I'm probably going to pull all my positions in equities, and I'm going to stay out of the futures market and just watch the volatility. And then if I see a continuation pattern or a reversal, or where buyers and sellers are showing their hand, if the market maker is going to take this in a certain direction, I might take a trade, but it's got to fit my risk parameters. Just because there's big movements doesn't mean that I have to get in. These types of events, they get a lot of energy from traders who don't have very much experience. Traders that do have experience, limit their risk as much as they can. They might stay in a position, but if the position blows up, it's not going to wreck their account. So do the same. Play small. Don't risk too much. And if you don't have to play, don't. Watch it. And then get back in when the trade fits your parameters. Now, this is Joel at the Moneymaker Edge. Hope this helps. And I will be on Sunday. We'll go over a couple. Trades and see how it goes. All right, great. Thanks for listening. Like, save, and share if you can. Thank you.